A trade giant's triumph. China's record surplus. China's economic dominance continues to grow. In 2024, the country achieved a remarkable feat, a record-breaking trade surplus of nearly $1 trillion. This means China sold far more to the world than it bought. This achievement cemented its position as a global trade powerhouse. The surplus reached an unprecedented $992.2 billion, according to Global Finance magazine. This figure underscores the strength and resilience of China's export-oriented economy. It also highlights the complexities of global trade dynamics in an increasingly interconnected world. This record surplus is not merely a statistic. It reflects China's growing influence on the global stage. It also raises questions about the sustainability of such imbalances in the long term. The world is watching closely as China's trade dominance continues to reshape the global economic landscape. The implications of this trade surplus are far-reaching, impacting businesses, consumers, and policymakers worldwide. The US-China trade imbalance, a growing divide. The trade relationship between the United States and China is one of the most significant in the world. It is also one of the most complex and, at times, contentious. The trade surplus that China enjoys with the US is a case in point. In 2024, this surplus ballooned to $400 billion, a 5% increase from the previous year. This imbalance reflects the vast appetite of American consumers for Chinese-made goods, from electronics to clothing. It also highlights the challenges faced by US manufacturers in competing with China's low-cost production. Despite the growing trade deficit, the political landscape has taken an unexpected turn. Returning US President Donald Trump, known for his tough stance on China, has surprisingly not targeted China with new tariffs. Instead, his initial tariff announcements focused on Canada and Mexico. Adding to the intrigue, President Trump has expressed interest in visiting Beijing, suggesting a potential thawing of relations. However, the trade imbalance remains a point of contention, and it remains to be seen how the relationship between the two economic giants will evolve. India and the dragon navigating the trade gap. The trade relationship between China and India, two of Asia's largest economies, is another example of the impact of China's trade surplus. While India has emerged as a global economic player, it faces a significant trade deficit with its powerful neighbor. In 2024, the trade surplus in China's favor reached $90 billion, a concerning increase from $85 billion the previous year. This widening gap underscores India's dependence on Chinese imports, particularly in sectors like electronics, machinery, and chemicals. India's reliance on Chinese goods, particularly in key industries, raises concerns about its strategic autonomy. This dependence also has implications for India's domestic manufacturing sector, which faces stiff competition from Chinese imports. The Indian government faces the challenge of reducing this trade deficit while maintaining healthy economic relations with China. This balancing act requires a multifaceted approach, including boosting domestic manufacturing, diversifying import sources, and negotiating favorable trade terms with China. Expanding influence China's trade with the world. China's trade surplus is not limited to its dealings with the US and India. Its economic reach extends across the globe, with the country holding a trade surplus with many regions. This dominance reflects China's role as a manufacturing powerhouse and a key player in global supply chains. The European Union, for instance, faces a $250 billion trade deficit with China, marking a 3% increase from the previous year. Southeast Asia, another crucial economic region, also grapples with a substantial trade deficit, reaching $150 billion in 2024. China's position as a top trading partner for 60 countries worldwide highlights its global economic influence. This widespread reach underscores the country's importance in international trade and its role in shaping global economic patterns. The impact of China's trade surplus on these regions is multifaceted. It raises concerns about job losses in manufacturing sectors, dependence on Chinese imports, and the potential for economic vulnerabilities. Section 5. Behind the numbers. Understanding the surplus drivers. Several factors contribute to China's persistent trade surplus. Understanding these drivers is crucial for comprehending the complexities of the global trade landscape. These factors range from macroeconomic conditions to deliberate policy choices, painting a nuanced picture of China's economic strategy. One significant factor is the depreciation of China's real effective exchange rate. This depreciation makes Chinese goods cheaper for foreign buyers, boosting exports. Simultaneously, macroeconomic factors both within China and globally play a role. China's domestic demand has been sluggish, partly due to a property downturn and low consumer confidence. This dampened demand for imports. Conversely, the United States has experienced a dis-saving shock with high government and personal spending fueling demand for goods, many of which are imported from China. Furthermore, China's unwavering focus on manufacturing, even amid sluggish GDP growth and weak domestic demand, has further contributed to its export dominance. This strategic emphasis on manufacturing has enabled China to capture a significant share of the global market for manufactured goods. Section 6. Made in China. A look at the top exports. China's dominance in manufacturing is reflected in the composition of its exports. From ships to semiconductors, Chinese-made products are ubiquitous in the global marketplace. This export prowess is a testament to China's industrial capacity and its ability to meet global demand for a wide range of goods. In 2024, ships topped the list of China's exports, accounting for 57.3% of total exports. This was followed by semiconductors, representing 17.4%. Autos constituted 15%. Household appliances also featured prominently, making up 14.1% of exports. These figures demonstrate China's role as a global supplier of essential goods, from high-tech components to consumer durables. This dominance in key sectors highlights China's growing technological capabilities and its competitive edge in manufacturing. China's export success is also evident in the significant growth of its exports in key markets. For instance, exports to the US surged by 15.6% in December 2024, reaching a 30-month high. This surge is partly attributed to front-loading by businesses anticipating potential trade barriers. Section 7. Beijing's perspective. Managing trade relations. China's remarkable trade surplus has drawn considerable attention and scrutiny worldwide. In response, the Chinese government has maintained that it does not actively seek a trade surplus. Instead, it emphasizes its commitment to free and fair trade, seeking to alleviate concerns and foster greater economic cooperation. Vice Premier Ding Xuexiang, a prominent figure in Chinese economic policy, has stated that China aims to achieve a more balanced trade relationship with its partners. He highlighted China's efforts to increase imports, signaling a willingness to address the concerns of its trading partners. However, despite these assurances, skepticism persists. Critics argue that China's industrial policies, currency management, and other practices contribute to its trade surplus. They point to the need for greater transparency and concrete actions to address the imbalances. China faces the delicate task of balancing its domestic economic interests with the need to maintain harmonious trade relations with its partners. The world is watching closely to see how China will navigate these complexities and whether its actions will align with its rhetoric. Section 8. Global implications. Analyzing the ripple effects. China's substantial trade surplus has profound implications for the global economy. It impacts everything from currency valuations to manufacturing jobs, creating both opportunities and challenges for countries worldwide. One significant concern is the potential for trade tensions. As China's surplus grows, so does the pressure on its trading partners to respond. This pressure can lead to protectionist measures, such as tariffs, which can disrupt global trade flows and harm economic growth. Furthermore, China's surplus contributes to global imbalances. When a country exports significantly more than it imports, it accumulates large foreign currency reserves. These imbalances can create financial instability and increase the risk of economic crises. However, it's not all doom and gloom. China's trade surplus also presents opportunities for some countries. For instance, countries that export raw materials and components to China benefit from its insatiable demand. Section 9. The road ahead. Future trends and challenges. Looking ahead, China's trade surplus is likely to remain a defining feature of the global economic landscape. However, several factors could shape its trajectory, presenting both challenges and opportunities for China and its trading partners. One significant trend is the ongoing shift in China's economic model. As China transitions from an export-driven economy to one fueled by domestic consumption, its trade surplus may gradually narrow. However, this transition is likely to be gradual and subject to various internal and external factors. Another factor is the increasing competition from other emerging markets. As countries like Vietnam and India enhance their manufacturing capabilities, they could erode some of China's market share, potentially impacting its trade surplus. Furthermore, technological advancements, particularly in automation and digitalization, will continue to reshape global trade patterns. China's ability to adapt to these changes and maintain its competitive edge will be crucial for sustaining its trade dominance.